What is up, everyone? So today we're going to be learning about the fractals in the market and looking at higher time frame PDAs and then going into a lower time frame, finding another PDA within that higher time frame PDA to get your entry and take that up to a higher time frame zone. So let's dive into it. Before we start, if you haven't already, join our Discord server. Click the link in the description. If you are watching this in January 2023, it is live and there will be a link to join. Otherwise, that link in the description for the rest of 2022 is going to put you on our email list so we could email you when we launch the server. So we're going to cover the PDA chart by ICT. We took a screenshot of his chart defining them from market price up and market price down. We're going to dive into a higher time frame PDA that I took screenshots of, and then the mid time frame or middle time frame, I like to call it, PDA on like a 1-4 hour chart. And then we go down into a lower time frame. That's where we're looking for our entry. But really, you could find an entry on any of these time frames depending on what kind of a trader you are. If you're a position trader, swing trader, or day or scalper. So this is that chart from ICT. It's a little blurry, but you get the idea. So you're going to want to label these 1 to 7 and 1 to 7. And that way you look for them in that order. And then the middle is market price. So this is price now. You're going to look up here. This is known as the premium zone. And then you're also going to look down here. This is the discount zone. And it'll make more sense when we look in the images. But basically, in a bullish market, the big order flow is going to come in down here in the discount. They don't want an expensive trade. They want a good deal on their trade so they could take it up, right? They want deals. So if you're looking for a deal on a bullish market, you're going to be looking down in this zone. Now, if you're looking for sells, you want to sell it at the premium. You want people to pay a lot for your sell and then get out at a cheaper price. So here's the daily chart. See right here, price shifted up and it had some good strength to it. So we broke this order block. We drew that out on the daily. This last up before the market structure shift, we put the body, we blocked it off. That's our breaker block. So now we have these overlapping. So this breaker block is a good zone to look at because we got them overlapping, right? And that's the smaller refined zone within the bigger zone, as well as the lower number. And then once we did break through, price did create a fair value gap. But I honestly, if it was me trading, I would not use it as is, just because if you drew a line from here to here and marked out 50%, it's kind of at that bottom of that fair value gap, just depending on how you what kind of trader you are. So I would not really look at that. I would be focused on this breaker block for the daily. Now, if you're a position trader and you just kind of hold on to things for a few months or just for the most of the move, right? This you could get in, put an order right on this breaker block. You would get tapped in, and you could take profit up here. Or if you zoom out, maybe on the weekly or monthly chart, you might see other zones prices looking to draw to. But if you're not a position trader, we're going to drop down to the 4-hour chart now, or 1 hour. I did add pictures. You can see it bigger now, kind of a little easier. If you're in our Discord server, you will get access to this presentation as well as these pictures for reference. All right, now the 4-hour or 1 hour chart, I do use both. So if I can't really find much on the 4-hour chart, I'll go down into the 1 hour chart. Or if it's a big range on the 4-hour chart, I'll go down to the 1 hour chart to refine it. So you can see fair value gap, order blocks, and breaker blocks did form on this. So we have our daily zones right here. And now we're zooming in. So again, last up candle before price went down and then broke it. And the reason why we're doing the breaker block versus mitigation block is this would be a mitigation block down here. You could have got in. I honestly did not. That's a valid markup, right? I didn't see that when I was marking this chart up. And then breaker block. So breaker block here. We have a fair value gap. So price left, came down, and then left and broke that zone again, leaving us a fair value gap. Filled it up nicely. You could have entered here, took it up, and then it also created this order block. So these 3 down close candles, because there were no up in between, so like this could have been one, could have got in right there as well. But I like the price action here a lot better. So order block, again, when there's 2 zones, I like the one that's more refined. So that fair value gap would have been a great entry, taking it up to previous highs. And that's pretty much it for the 4-hour. If you were doing this order block though, you would have had to wait for price to come up here and then back down into it. Then you could have got in right here. It did hang around for a little bit before it went up, came back one more time, and then shot back off. So because we're in a daily order block, you got to keep in mind price is going to sit here a little longer because it's on the higher time frame. You know, there's way less candles, but on the 4-hour, 1-hour, there's gonna be a lot more candles hanging around here before we leave. You could have got 2 entries, could have gotten on the fair value gap, took profits around here, because I believe if we go back, what is that? 41.10, somewhere right around there. 40.75, let's say. So it did not quite go up all the way. So you would not, there's really no reason to take profit here unless you just took it at this gap. For me, I don't trade on this time frame. This is for swing traders. So I will be dropping down to a lower time frame in my trade strategy. But these are excellent entries right here that align with our 4-hour or with our daily. So you could quickly see, got it there. Fair value gap entry. Didn't go back into it as well. That order block is what kind of held this up. Went one more time. You see all these bodies are still within the zone. Wicks could go through it, but as long as the bodies close within this, it's still an option for your trading. All right, so we're going down to the 15-minute. I could not go any lower just because of the replay. The candles wouldn't go this far back to where this daily setup occurred. So we're on the 15-minute. This last up move right here, I'm drawing out the 50% fib. So right there is the middle. These are the discounts. That's the premium. These 3 candles right here, I start to use the wicks now on the minutes charts. So these 3 candles, we got a breaker block. It literally, I clicked the candles. So the high of this and the low of this was the exact same tick. So if you had it at that tick, you may or may not have got filled. Usually I put a tick or 2 above my target anyways and take profits a tick or 2 below it, just so I do get filled. If it's happens to hit that exact number, sometimes you get left behind. So we got that breaker block there, got an entry there, and then you can't see it. I'll go to the next page so maybe you could see it a little more. But right in here, there is a fair value gap under the 50%. So I wouldn't use this. You could use this in the breaker block, but the breaker block got hit. This fair value gap did not get hit. So you would have been left behind here, as well as if you're looking at something down here, right? You would have got left behind. So that's why I like to keep this visual on here that anything under this is all valid to take up for buys. So that is marked up there. You can see that got tapped in, as well as that breaker block. That's pretty much fractal example of going from the higher time frame down. Same things repeat, and you look for them, get in or refine them, and keep going down your time frames until you're in the chart that you take your entries on. I usually take my entries on the 1 or 5 minute chart, which I would like to give you an example, but there was no daily setup, so I had to wait, a month or so for another daily setup to form. So I had to go in the past, and that was the closest one I could find. They happen on every time frame, so you should be looking on every time frame, because the more aligned you get with the higher time frame, the better probability you're going to have, and you want the highest probability possible in your trading. So making sure everything lines up is a great way to make sure you're on the right side. And then be honest with what kind of trader you are. So if you're a swing trader, there's no point in looking on the 1 minute or 15 minute unless you're just like, I want the best entry ever. But that'll mess your mind up because the 1 minute charts, going up then down, then up and down, and you might be like, oh, it's going for a sell. But then if you stick with your time frame, 1 or 4 hour, you could see, oh, it's just creating a wick real quick where the body closes. Yeah, we're still looking pretty good for this buy or sell, whatever you're doing. So stick with the range of what type of trader you are, and that'll help you keep focused on what's at hand and not get wishy-washy with your bias because if you're looking at different time frames that don't resemble your trading plan and strategy. And as always, adjust your risk properly to your stop loss. If you got a big stop loss, don't put as many contracts on or positions if you're doing Forex. That is key. So, adjusting your stop loss and risk, making sure you're only risking 1, 2, 3%, whatever your strategy is, stick to that. And if you lose, cut back on risk if you re-enter. All those type of rules. If you're in our Discord server, we do cover all this. And then win or lose, if you followed your rules and you know your rules work, a loss is a loss. You can't win everything. Sometimes you have to pay to play. And think of it this way. If you're driving to work, you're paying for the wear on your car, you're paying for the gas, and you're paying with your time driving to work. But the reward is much higher, right? You get your paychecks, you get money to cover that and your food and your housing and all that stuff. So think of it as just a fee to play the game, as in a fee to get yourself to work so you can make that money. So a loss is a loss. Learn from it. If you did everything right, hey, sometimes the market doesn't obey everything you expect to happen. So journal it down if you watched our journaling video, and this will help keep your mind clear, focused, and on track. Thank you for watching. Don't forget to like and subscribe if you haven't already, and click that link in the bio or in the description. If you're watching this in January, you could already join our Discord server. If you're watching this before January 2023, click the link and it'll take you to an email list. Put your email in and we'll email you on the launch of our course. And who knows, there may be some extra benefits for getting in on it early. Anyways, thanks for watching. Happy trading, and I'll see you in the next video. Peace.